Good day, fellow investors. Everybody is saying Apple is a sell. When they say hold, it usually means sell. The general feeling in the market or perspective on Apple, it is that's extremely overvalued, thus risky. But the stock just keeps going up. And especially since 2019, the China scare, and then the pandemic, this was nothing but up, up, and up. Over the last 5 years, Apple stock is up an amazing, staggering 354% and shows no sign of weakening. P/E ratio is 31 and the market capitalization is approaching 3 trillion. And if you look a little bit deeper into it, since the pandemic boom, this is a stagnating business at best. Revenues aren't growing, okay, services a little bit, profits are stable, in line with cash flows, and maybe they have some new special product that will revolutionize the market like it did, but that's unlikely. They had their hit, the iPhone is still a hit, but we will see whether something new will come around or not. However, if you look at it from a normal perspective, a P/E ratio of 30 is a little bit high. But then why the stock just keeps going higher and the market cap is a staggering 3 trillion that's worth more than a few countries bunched together? And here you have the explanation of what's going on. So they have their net income, and their net income is in line with the distributable cash flows, which most of it is used to repurchase common stock, and a little bit, just a little bit for the dividend. Over the last 4 years, they spent more than $350 billion on repurchasing shares. And now $350 billion on the current market cap, it doesn't seem much. But if you look at when the stock price was 50, when they started with the repurchases, thus the market cap was a quarter of what it is now. That's around, let's say, 700 billion. Spending 350 billion in repurchases on the start base of 700 billion, the result is this. The stock is up 4 times. Now, if you just go through the normal buyback discussion, and we will discuss that in the next video, of course, those keeps the stock high. They are stupid buybacks because it's unlikely the stock will 2x and go to a P ratio of 60. So I am of the meaning that buybacks are smart at cheap prices, but at these prices are actually long-term value destroying. But that doesn't matter, because when it comes to buybacks, there is this very important Harvard study made on the inelasticity of markets that is saying that if you invest $1 into the stock market, you increase the market capitalization by $5. I'll put it here, the link to this very important video, and also in the description below. So Apple spent 400 billion. The market cap went from 700 billion to 3 trillion. That's the inelastic market hypothesis at its best. And if they keep spending 100 billion per year in buybacks, the stock will slowly even continue to go higher. Because you cannot fight in the market, you cannot fight this amount of money. And even if most people are against such valuations, especially for a stagnating business, you cannot fight Apple's money, and the focus there is really on pushing stocks higher and higher. Therefore, Apple's risk and reward, the risk is very simple. If there is one bad year, like we had in 2016, or a flop with an Apple, or whatever, new iPhone or something, one bad year where the cash flows just go down from 100 billion to 50 billion, which is still stellar, the stock price crashes 50%, because Apple doesn't have the money to protect the stock price, and then also negative sentiment, and all this negative sentiment that's already around there simply takes the win and the stock goes down. That's the risk. 50% down is easy with Apple on one bad year. On the other hand, what's the reward? The reward is that Apple will keep spending 100 billion per year and pushing slow and steady the stock higher and higher. For me, that risk reward is not attractive, and therefore I'm saying Apple stock will likely go higher if they keep spending that money on buybacks. But I'm saying I don't like the risk of a bad year. Thanks for watching. This is my opinion on Apple. Subscribe if you like more. I'll see you in the next video.